to the Hansley Analytics Daily Market Commentary. I'm Paulo Navarro. Today is Monday, June 11, 2012. For the market internals, the New York Stock Exchange advanced decline differential closed at negative 1,763. But I want to point out that we started at 1,500. We just started selling off pretty hard whole day and basically ending at the lows of the day for the internals here on the New York Stock Exchange. For the Nasdaq, the same happened. We closed at negative 1,220, which was very bearish, closing at the lows and opening up positive for the day. There were 32 52-week highs for the S&P 500 and 10 new 52-week lows for the S&P 500. For the volatility, there were 538,000 contracts traded on the VIX and 95 million in total premiums paid. On the dollar-weighted put-call ratio for July, we saw a 0.11 reading with 56% of the premiums paid, which is very bearish. But again, as I mentioned, with the internals of the market, it just dropped throughout the day, becoming bearish and more bearish throughout the day. So it was negative the whole day, leading to a sell-off on the close and ending on the dollar-weighted put-call ratio at 0.11, which was the low for the day. We have a special offer by TradeStation. Get your Hansley Analytics proprietary indicators paid by TradeStation. Contact Active Traders Office in Chicago, Peter Albino, at the number listed below. Okay, here we have the daily chart for SPX. As you can see here, we had a big reversal. We could not break this trend, this line. We had some resistance here at the 1334 level. Then we just sold off and actually had an outside bar, which was very bearish for the market. This could be the change of trend that we've been watching here, going higher, breaking now down after a failing of breaking that 1334 level, now going lower, maybe testing these lows that we've made in last week. So that's going to be critical here for SPX. As we're going to watch the SPY to get more levels here. We broke the 0.6 line on SPX. Now we're looking at the lows here around 27. Those are going to be critical to break if we want to go lower. And some resistance here at the 34 level. If we want to watch the moving averages, you could see here we have the 200-day moving average at 129 right now. So that's going to be a critical test here. 129 level. If we do break it, the 127 levels are going to be very important. Again, to the upside, the 134 levels are the ones that we've been watching. If we look at the intraday action or a shorter term chart, we're going to look at the 60-minute chart. You can see here that an inverse head and shoulders is forming right now. Shoulder, the head, and the other shoulder right now. So that's what we've been watching here on the 60-minute chart. We're going to see how it plays out. I've drawn here a couple of trend lines to keep your levels. This is going to be critical to break to the upside, to break that inverse head and shoulders and go higher. 133 level, I am actually looking for the 134, breaking this resistance that we could not break today. So that's going to be my level here. To the downside, we need to break the 131.5 level on a quarter to break the shoulders. That will put us looking at the 200-day moving average, which is here. We talked about it right now. Here's the 200-day moving average. Breaking here would put us at the 127 level, which was the lows of last week. So those are the important levels on SPY. Now we're going to look at gold. Here we have the daily chart for gold, GLD. Two important things to watch here. Last two trading sessions for GLD, we were able to hold the 0.6 line. As you can see here, we bounced off Friday and we bounced up today, which was positive. This makes us believe that the downside is capped for now. We're trading against the 0.6 line, which is at 153.43. We want to see a higher high here. We've been seeing higher highs from here to here and a higher low from here to here, which we're able to put another high around here. So the 61, 62 levels are going to be critical here on GLD. If we do break to the downside and we break the 0.6 line, we're looking to test the lows that we put here at 148. So that's gonna be if we do break the 0.6 line to the downside. Okay, now we're gonna look at the Russell ETF INWN. You can see here, this is important because this is a small cap. This tells us the risk. We also had a big outside day today, but here's the chart that I want to look at. Again, breaking the 200-day moving average now. So this one shows us that risk is off right now. Huge down bar we got here. So maybe for this one, we're looking at the 65 level. This is going to be also key levels for the risk on the market. Last chart we're going to look at is here the McClellan oscillator. As you can see here, 2012 we were not seeing huge readings as we did in 2011 around October. We did make a slightly higher high than we made last month, so that was not as negative, but we broke down, failed to go lower here, as you can see. I just want to show this chart because I just want to point out that by any means we have been oversold right now. We are basically good. The market is not oversold by any level here. We're seeing oversold levels below 250, 300. As you can see here, these points here, those are really oversold levels. Right now we're good in the market. So I just wanted to point that one out. I'll see you tomorrow. Have a good day.